Good afternoon, everyone. My name is Imogen Garner, and I'm going to moderate our next panel, which is going to focus on the topic of asset managers, asset owners, and how can they cooperate between each other on ESG issues. Now, to talk about this topic, I am joined by some fantastic panelists. You will be able to see their names and their bios up on screen, but just to introduce them very, very briefly, may I please welcome Jean-Jacques Barberis, who is Head of Institutional and Corporate Clients Division and ESG at Amundi. Diego Liechti, who is Head of Investment at Nest Corporation. Hello, Diego. And we will shortly be joined by our third panelist, Kate Murta, who is Managing Director for Sustainable Investing and Chief Compliance Officer at Harvard Management Company. Now, before we start with the panel proper, the first thing I wanted to do is ask our panelists, and Diego, I'll come to you first, and then to you, Jean-Jacques. I wanted to invite you each just to very briefly comment on the positioning and strategy of your organization in relation to ESG and responsible investment. Diego, would you like to go first?
Yeah, sure. So Nest is a Swiss pension fund, and we are a pioneer in sustainable investing. So we invest since the beginning. So since roughly 30 years, we invest in a sustainable way. And we are quite restrictive on our policy. So, for example, we separate the asset management from our sustainability analysis, and the reason is for us is conflicts of interests. So, as an asset manager, you want to have returns. That's your major goal, and sometimes, or some stocks could be profitable, although they are not sustainable. So we separated it. And to give one word why it's so restrictive, for example, for global equities, we exclude roughly 60% of all stocks of the MSCI World due to sustainability. So our portfolio managers have to, let's say, outperform the MSCI World through a rather small sample of 40% of the universe. So that's quite challenging. Okay.
Diego, thank you. Jean-Jacques, would you like to comment as well?
Yes, thank you very much. I don't think we are as restrictive as Diego, but it's an encouragement to do more, I would say. So at Amundi, roughly speaking, we are an asset manager, the largest in Europe. We report a little more than 700 billion of AUM under Article 8 and Article 9 under SFDR, to give an order of magnitude. If I come to the organization, we do integrate fully ESG into all the investment processes, and we do that with the help of an ESG department that is made roughly of 40 people, that is fully independent of the rest of the company, meaning it reports directly to the CEO through me, but has its full independence, which is for us something absolutely key, as well, as Diego mentioned, to manage the conflicts of interests. And if I look at the strategy that we try to pursue, I would say at the moment we have three main areas of focus. The first one is, I would say, the continuation of the full integration of ESG into all the investment processes, now more and more focusing on the impact reporting associated to it. The second is the work with a number of our clients and in our open-ended funds on how to progressively align depending on the targets, but basically how to be progressively Paris aligned. And the third, which is a little specific to us, we try the best possible, not sure we are totally successful to do so, but at least we try to make more and more, I would say, the link between the E and the S, and therefore trying to see how we can work through our investments on the social acceptation of the transition, which we consider is an absolutely key challenge to make the transition just possible. So that would be, I would say, our three main areas of focus at the moment.
Jean-Jacques, that's extremely interesting. You're talking about that interplay between the E and the S, and that sort of false dichotomy that some see, seeing those as separate things when the reality is that they're not. So thank you for touching on that. Of course, the focus of our panel today is on engagement, and Jean-Jacques, you alluded to that as well. And so what I'd like to do now is perhaps just move to the two polling questions that we would like to ask the audience, in which the audience will be able to engage in terms of their response on. So turning to the first question, the question for the audience, and they will answer with their views, and we will see them shortly, and then panel members will be able to make any observations on those. The first question for the audience is this: are you currently actively engaged in discussions related to ESG with your managers, if you're an asset owner? So are you currently actively engaged in discussions with your managers, if you're an asset owner, or with asset owners, if you're a manager? And so the options for you to respond, and I hope you can find one that fits you, is yes, we're very actively engaged. Yes, though we're at the earlier stages of engagement, or no, we're not, or we're not yet really engaged. And so let's see what the audience members have to say in response to that, and then we can respond. The second polling question for the audience is this. The question is, what are your key priorities in relation to sustainable investing at this time? And it's multiple choice, this question, and we've given you some choices. Please give us if they are not the right choices, but we have given you a category of other, so you can tick that one if it's relevant. What are your key priorities in relation to sustainable investing at this time? Is it the just transition, climate risk, diversity, equity, inclusion, ESG, integration, engagement, other, maybe any of those? And so the audience, please respond. What I'll do now is I move on to direct some questions at our rather bijou, small but perfectly formed panel. So the first question which I would like to ask you is, we're talking about how asset managers and asset owners can cooperate on ESG. I wondered if you could first just elaborate a little and expand on what exactly we mean by cooperation here. What does it look like? What does it involve? Diego, would you like to start?
Okay, I can start. So like I said before, we really separate our sustainability from the asset management. So, however, still we have to communicate with our asset managers, because sometimes there are some critical questions regarding some positions. For example, in the Swiss market, we exclude Nestle due to sustainability issues, and Nestle is roughly 20% of the Swiss stock market. So it's quite challenging then for the asset manager to manage this asset class without that stock. And therefore, we interact with them to more or less challenge what they do. And on the other side, they do it with our sustainability approach, meaning they ask us why you're excluding now Nestle. So, and then there's an open discussion, and yeah, that leads to sometimes new results then. So, yeah. So there is still an interaction there.
Jean-Jacques, from Amundi's perspective, what are you seeing cooperation really consist of?
Well, I think, well, first, I think I would love to have, I would say, more clients like Diego that could be as challenging. I don't want to be provocative, but I think by definition, the asset management industry is a stock industry, and therefore has a natural tendency to be a little lazy. And therefore, I think it's good if it is challenged. So maybe I do not invite all the potential clients or clients that are around to be as demanding as Diego, but at least I think the fact that there is a challenge on I would say the client side is for sure very good. This being set aside, if if you come back to the etymology of cooperation, and not inflicting you some Latin, but at the end of the day, it's cum operare, so it's acting together. So I think by cooperation, what is important is the action, and therefore, where I do see that there is potential cooperation is, where I think there is cooperation is on two parts. First, it's in helping, to the best of our capacities, our clients to frame their objectives, because not all the asset owners, as Diego, do have such a precise view on what they want to do. So I think the very first thing is to help to define the objective. And then afterwards, we are more talking about the implementation. So if I take a very concrete example to make it, I would say, tangible, at the moment, a conversation we have with a lot of our clients, a number of are willing to or are already decided to engage into some kind of net zero commitments. The net zero commitment to 50, it's nice, but it's very far away. So the question is, what do you do in the short term? And so a conversation we have with a number of our clients at the moment is, okay, if I want to be net zero in 2050, I want to be credible. What shall I do in 2025? And what basically helped me to do that. And there, when the cooperation starts, is what is the type of modeling you can do to say, okay, this is the natural evolution of your portfolios, and in terms historical, but also in terms of projection. So that would give you such a result if you do nothing at all, I would say. What do you do then? What are the options of what you can do in your portfolios? What will be the potential associated costs, if any? And then that's where I think cooperation is really, I would say, meaningful, because you enter into something where you help to set the objective, and then afterwards to give the menu of options that are available to reach that objective. And then afterwards, it's the client's decision to tell us what she or he wants to do. So I think this is, for me, where there is true cooperation, which I think is more interesting than a classical or a traditional ESG criteria within an RFP that where basically you see if you tick the boxes or whatever. I think that's where true cooperation is there. And I think that's the interest is to have multiple asset managers on that front, is that you can ask them the same thing, and then you can make comparisons. And so I think this is a good incentive for us in terms of natural competition. So sorry, it's a long answer and an elaboration on a concrete element, but I think that's where true cooperation can be.
Jean-Jacques, I appreciate your perspectives on that. And it's interesting, isn't it? Asset managers and asset owners are really on a journey in this together, and it's a long-term journey, and there's that challenge in how do you get from A to B, when B is a really long time in the future, and what are your milestones, and how do you course correct, and all of those challenges. I just wanted to pause now just to convey what the results were of our polling questions. Actually, it was quite interesting in terms of the question around active engagement. And so if you remember, the question was, are you currently actively engaged on both sides? I'm giving three options. Yes, we are. Yes, but it's early days. Or no, we're not really. And actually, 80% of responses were that we are actively engaged. 20%, no, we're not or not yet. So less of the middle ground, which is, yes, we're just starting. And just in terms of key priorities, ESG integration, completely understandably, 100%, that's a key priority. Engagement and climate risk and the just transition, a little bit lower, around the 60 and 70%. Diversity, equity and inclusion, lower, though, around the 40 and 50%. And Diego and Jean-Jacques, do you have any comments and observations around those findings?
At the moment, not that much, because in Switzerland, at least, you would observe the same. So there is a lot of pressure from the people that the pension fund invest in a sustainable way. They also put pressure on the Swiss National Bank to invest sustainability. So there's a lot of pressure, and sometimes they do things what they don't believe in. Let's say it that way, just because of the pressure. So it's a challenging environment at the moment to let people believe that we can change the world through sustainable investments. So.
No, but maybe about three comments on my side. I think, well, first, I suppose the result of the poll are somehow reflecting the geographical origin of the participants that I presume are mostly European. I'm not entirely sure that we would have exactly the same results on other parts of the world, notably crossing the Atlantic. I hope it's going to move into that direction under the new Biden administration for sure. But I think first, it's important, but what I am mentioning, Zach, because I think it's important to have that in mind as European, in Switzerland, in France, we tend to believe that the battle is won. The cultural battle is won. I'm not sure it is entirely the truth in all geographies and even in our very own countries. That's my first remark. The second is an elaboration on what Diego has said. I think what is interesting is that the pressure that Diego mentioned and in a way that is reflected in the very high figures that you mentioned, Imogen, is also the result of an evolution, which is that more and more the demand comes from the retail side. And from the ultimate end investor, which is something relatively new, I believe. Mm-hmm. And this is something that we're a relatively big animal in the retail world that we can measure as well. And my third comment is, I think it would be interesting to have another poll, but probably it's not possible to do it live, on the question, okay, you engage actively, but you engage actively on what? Is it on your future investment or is it on your stock? Because I think that's where the trick is. When you talk about net zero commitments or these kind of things, I think it's very nice to announce that we're going to launch only new products that are fully Paris aligned, et cetera, et cetera. But the true question is, what do you do about the stock? And I think that's where it's important to put the finger on, because we face exactly the same problem in the financial industry as in the rest of the economy. If we only build up renewable energy from now, but that we still rely on a massive, I would say, fossil fuel consumption that is inherited, we are not going to meet the target. And it's a little bit the stock in our world. If our stock of AUM as well are not evolving and progressively aligning, we're going to meet the target, to meet the deadline. So I think it would be interesting to refine a little bit the point. Okay, on what are you engaging? Are you engaging for the things you intend to do in the future or the things that you're doing already?
Yes, that would be extremely interesting to see. And thank you for your comments, Jean-Jacques. I'll direct the next question to you again. And what I'd like to ask you is, in your experience, where are there specific expectations, specific challenges that you as an asset manager and others are being set by asset owners? What are they specifically looking to you for? And how do you see that evolving over the next, a year from now, 5 years from now, even longer in terms of time horizon?
I would say at the moment, I don't think I'm going to be extremely original, but I think the two main evolutions that I see at the moment is first, the question, which is, okay, great, you are fully integrating ESG, perfect. Now show me the results that it leads to. And I'm not talking about the financial results, but basically, what are you, okay, you're doing it, but for what? And what is the impact that is generated out of that? And I think this is a question that we already have, which is extremely tricky and very complicated to deal with properly, to be honest. But I think this is a growing demand for sure. And this is particularly a growing demand coming also from the retail, because here you need impact reporting and impact reporting that is understandable, which is and relatively transparent. So that's one thing. And the second thing I believe that we're going to see more and more, but again, I'm not going to be extremely original, it's which is as we're more and more, I would say, in an alignment mood, the question is going to be more and more, and is already the case, okay, show me the potential evolutions of my portfolios. Think how do you measure the potential trajectories? What is the ESG potential of companies? And this is, I think, particularly complicated, particularly challenging. But at least that's clearly where I see that the demand is going to be more and more focused on. And you cannot answer to it, I would say, by the traditional tool that we used to have. You need, I think here, technology can be very important in the type of things that we try to do in the climate modules of our tools, is to give the possibility to an asset owner to model its portfolio, to project it on the climate side. We're not in capacity to do it on a multiple number of aspects, but I think here that's probably one of the evolutions that I see.
Diego, you were nodding as Jean-Jacques was talking. Can I invite you to comment also?
Yeah, he's really right on that. So, but the thing is, you can measure things from your portfolio, but measuring the real effects, so meaning the effects on the economy, on the real economy, is so tough. So the question here is probably sustainable investing is only a small puzzle to change the world. So in my opinion, the instrument with the most leverage is consumer demands. So that's the most important leverage. People, like Jean-Jacques said, people change and people demand more from their companies, from their products and so on. And that's maybe the best thing to do. And measuring the effects, it's so tough. So you don't see any academic study finding an effect at the moment because it's so tough. So to differentiate where the effect comes. So for sure, the economy is going in the right way. So maybe not at full speed. They should, but they're going in the right way. But the question is, what really brings the economy up to the full sustainability speed, let's say it that way. And probably, consumer demands have more leverage than sustainable investments.
But Imogen, if I may elaborate on that, I think I totally concur. I think the absolute effects in detail, it's extraordinarily complicated to do. Yeah. And I think if someone pretends that she or he is in capacity to do it, I'm very happy to hire he or she immediately. But I think there are some elements, nevertheless, that we can probably use as proxies, or at least to show that you have an impact. I give you an example. One of the topics of our engagement policy that we discuss with a number of our clients, for instance, is to request for the companies we're invested in to engage into SBTi. Depending on different levels. This is something you can measure by way. You don't know if at the end of the day, if it's you that has, I would say, why companies get into it. But at least you can say, okay, here are the total number of companies I'm meeting in. Here is the engagement I made vis-a-vis themselves, saying, okay, engage into that. Here are also the consequences I take if they don't, the years following afterwards in terms of on voting. And then you see progressive, here I think you can have an impact that you measure somehow, then the ultimate end effect, impossible, but at least this impact you can do it. Or things like...
I fully agree. You can measure the consequences of firm policy. Yeah, I fully agree. So, but then it can also be because consumer demand has changed and stuff like that. So it's just one part of it. But I fully agree we have to do it. So yeah.
I totally concur with Diego on that one. On the ones that are, I would say, explaining that finance is going to save the world, and I'm not being gentle with Bertrand Badré, who wrote a book that is entitled that way, I think personally I don't buy it. I think it's by definition far more complex, and we just need also to be a little modest in what we're doing.
Yeah, right, perfect.
Jean-Jacques and Diego, thank you so much. I think we've got a few minutes left in which we can take some Q&A from the audience. And so I wonder if we have had any come through. Laurent, I think you're going to ask any of the questions that I've received from the audience.
Yes, we have a question from the audience. What are the requirements in terms of impact investments, investment size, track record, geographical focus, investment origin?
So impact investments, what are we sort of seeing there in terms of size, track record, focus, investment horizon? Jean-Jacques, maybe you'd like to take first.
I'm sorry, I'm going to, because for a reason I didn't completely understood. I had the pleasure to participate to 2 panels today at the same event. So sorry for the ones who already heard what I said at the first one. But last year we conducted a study that was interesting among our retail clients, asking them on what would you like to see impact reporting on. According to your financial products. So basically, what would you like to see being reported? And for instance, we were expecting to see the climate effect, or basically the evolution of the carbon footprint coming first. It was not the case. The very first one was about water management, the impact of what we do in the portfolios on water management. The second was on plastic pollution, and the third was on climate. I'm just sharing that. It's interesting to see that this was the demand. Yeah, it's a little tricky in a way, because you would say it should be the climate one. But at least I think it's interesting. First, it also to make us all modest, because it means that the real concerns, maybe we didn't get them immediately. But these are 3 concrete demands ranked by order of preference that we had last year in our retail network clients, just to give a very practical answer.
And Jean-Jacques, that's really interesting. Diego, did you have anything to add?
I have more a general comment on impact investing. So I'm generally quite critical of impact investing, because to have a real impact, you have to have a lower return. So you have to demand a lower return to get some, let's say, to push an invention or something like that. So by Swiss law, you're not allowed to do that. So if it's let's say a profitable project and in market and risk adjusted terms, then it's a normal investment. So no impact investing. So maybe it's a bit, my explanation was a bit complicated. So for me, the real impact investing can only made by retail investors, but not by institutions like Nest, for example, because we're not allowed to invest in products that have lower returns than market returns. Yeah.
Thank you, Diego. I think we have one more question from the audience.
Yes. Can you say a little more on how regulatory developments will give rise to additional cooperation between assets owners and managers?
Okay, so that's a big topic for us. So I'm interested in how we can sort of distill our experience pithily on this. How are the many regulatory developments that are in play at the moment affecting cooperation? How are they driving it?
It's a tough one.
It's a tough. No, but maybe I can start by then Diego has the time to think about it, because I don't think I'm going to give a very good answer. No, but I think I give a very practical example. So SFDR is now live. Yes. It means, practically speaking, that you report, for instance, the mandates that you manage on behalf of clients, and you put them in a category. Are they Article 6, 8, or 9? And then basically, so that's an exercise we run. And so we reported to a number of our clients, institutional, that they were not falling into Article 8 or Article 9, because basically in the mandate they originally designed, the integration of the ESG was not really there. And therefore, some of them are very unhappy with that because they have to come back to the governance and saying, okay, the problem is that when I look at my total portfolio, I only have XY that is Article 8 or 9 and a lot that is Article 6, and this is not great. And therefore, I need to change that. And that's a very concrete effect of the regulation, which is that we see a number of our clients coming back to us afterwards saying, okay, this mandate that you manage for me is now Article 6. I want it to be Article 8 or 9. Tell me what I should do, or how I should reshuffle it, or what would you do to make it eligible? And in a way, I think it's a good incentive. It's a good incentive in a way because it pushes everyone, I believe, in the right direction. And afterwards, you can have the conversation: is Article 8 or 9 demanding enough? That's another story. But I think that's a very concrete effect of the regulation that is pushing both the asset owners and the asset managers to work together to engage more into the development of sustainable finance. Mm-hmm. No, Diego, you have time to think to something very smart to say in comparison to what I just did.
I did. Thanks. So in Switzerland, we have no regulation at the moment, but the risk of regulation is quite high. And therefore, asset owners and asset managers work together to, let's say, to have a standard somehow that we don't have a regulation in the end. So it's a good thing, or a good let's say incentive to work more closely together. So mostly on reporting standards and stuff like that.
Thank you, Diego. It'll be very interesting to see how that plays out in Switzerland. Time will tell. And Jean-Jacques, that was very good answer. So thank you for it. Much appreciated. Thank you. I think that sort of draws us to the close of this panel. So thank you, Diego. Thank you, Jean-Jacques. And thank you to the audience for their collaboration as well.
Thank you very much.
Thank you very much, Imogen. And we need to reconvene the same panel with Kate because we missed her.
Indeed. I shall debrief her. Thank you, everyone.
Okay.
It was a pleasure. Thank you very much.
Thank you.